Hello guys, welcome to Wesley Forex Academy. If this is your first time on the YouTube channel, do not forget to hit the subscribe button if at all you like this video. So straight to the point guys, today we're actually going to be talking about 4 simple ways to avoid spikes that can blow your account on boom and crash. Now, definitely, yeah, a lot of traders who trade boom and crash are having problems with the spike because most of the time they come when they least expect, and when it comes, it doesn't work. Stop loss does not work against the spikes, so when it comes, it just boom blows the account, and they lose lots of money. So today actually I'm going to be teaching you 4 simple ways to avoid spikes that can blow your account. Now I will seriously advise you to watch this video to the end. It's educative and you will not want to miss any part of it. So straight to the point, guys. The first, which is actually painful but is the truth anyways, you need to let go of designer indicators and learn pure price action. Now, I actually called this designer indicators because most of the times once you have your charts full of indicators, you begin to have that impression that this is the kind of trader I want to be. You want to have things decorated on your screen rather than making the blues. So as a beginner or whatsoever level you are at, or you need to get rid of indicators. Indicators, the lag, the repaint, and all that. So if you rely on indicators to take decisions for you and look at the market for you, most likely, most of the times, you are going to get caught by miserable spikes, by dangerous ones, guys. So you need to learn pure price action. Now, these indicators are just programs that only react when the market looks like it's aligning with their coding. Get, I'm gonna take that again. These indicators are just programs that only react when the market looks like it aligns with its coding. Indicators, they are just robots. They are coded. When they see A, they should act B. So sometimes maybe they may be programmed to see capital letter A and then act with small letter B. But then when they see small letter A, it looks like capital letter A. So they just take actions, and using indicators, sometimes you just see you're taking wrong decisions actually, and then you are caught lots of the time fake moves and you lose money. So you need to get rid of indicators. And then when you learn pure price action, you understand that the market do not react to our actions, but instead we traders look and react based on what we see in the market doing. Now, one thing about pure price action, or one thing about trading generally, is that you shouldn't be rigid about what you want to do in the market. You shouldn't say this market is going to go up, so you're buying no matter what happens. No, that is not how it works. The market does its thing. You react to how the market moves. You understand? But then indicators, they want to see a candlestick now and then they're going for a buy. They don't care whatsoever is happening in the market again. But then when you master price action, or you are conversant with price action, you understand that now you have to react based on what you see the market doing. You get the point, guys? So the next point is to trade with the trend. Now you need to look for buys or buying opportunities in an uptrend, and then look for selling opportunities in the downtrend. Do not forget, the trend is your friend. Now I'm gonna show you this example on a chart. I'm gonna show you this on the chart now. Now, guys, this is boom 500, the 30 minutes time frame. Now, currently on the screen, you can see that the market is on an uptrend. The current part of this market is on an uptrend. You can see it's trending up, guys. Now, on an uptrend like this, what you need to look for are buying opportunities. You can just see that the sell that happened, we are little compared to the buy moves. You see, the sell that happens, we are little compared to the big impulsive move that occurred. Get the point now? So on an uptrend, you look for buying opportunities. Even if at all, let's say you buy here, you buy at this point, this retracement wouldn't cost you so much. The market will still recover and even put you in huge profit. Why? Because we are on an uptrend. But imagine you are actually selling on an uptrend and then hoping to hold for long. Let's say you sell at this point and then you're hoping to take profit at this point. Now look at what the market did. It hit your stop loss back to back, guys. So when you see that the market is trending up, you're seeing a low, a high, a higher low, a higher high, higher low, higher high. Make sure you look for buying opportunities. Trade with the trend. The trend is your friend. So let's go back and you see. So the third point now is you shouldn't trade in the wilderness. Do not trade in the wilderness. I know you might be thinking what this means, but I actually mean you shouldn't trade in the middle of nowhere on the charts without understanding what is going on in the market. Learn to trade from key zones. Trading in the wilderness, I'm gonna give you an example. Let's go back to the chart, guys. Okay, give me a minute to clear all this stuff. Okay, now let's assume you meet the market here. Let's assume you just come on your charts and then you see that possibly price is moving from, let's say, moving from this resistance here. It's moving down, 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 and then it's just here. And then you see the market. Okay, and then you see the market maybe somewhere here. And then you say, oh, the market is selling. And because you see it coming from a resistance, it did a little pullback, and then you just say, okay, the market is selling. Then you just jump into the market without confirmations, without a reason. Your reason could just be, okay, the market is selling. And then you just jump into the market in the middle of nowhere without knowing where the market is going. Now, what is actually going to happen? Definitely, the market needs to form structures. The market moves in waves. So if you're actually entering the market in the middle of nowhere, you're not trading at a key zone, you didn't find a good entry from a good zone, definitely the market will want to make some retracements. And if your account can't hold it, or your entry is actually so bad, then definitely you'll be kicked out of the market. Now let's assume you actually enter this trade here and you're hoping to hold for long. And then okay, a little sale happened, look at the consolidation, and then boom, definitely you're in loss. If actually maybe you didn't analyze well and then you closed, you'll have still been in this. You'll have actually still gotten this move. But then look at what happened after that. Let's check. Look at what happened after that. You see the big bullish move, guys. So do not trade in the middle of nowhere. If actually you're taking your trades, make sure you're actually taking your trades from a key zone. If you want to enter a market now, zoom out of your chart, look at what is happening. You'll be like, okay, this is a zone I can actually look for buys. This is a zone I can look for buys. Look at this high, a break, and a retest of the high. You can definitely look for buying opportunities at this point. So you take your buy, you put your stop loss. Now you're actually trading at a good zone here, guys. So your stop loss is calculated. You're not risking more than you're gonna make. And then you see the reward to risk ratio is amazing. You get the point, guys. So I'm gonna go over to the slide now again. So just a recap, do not trade in the wilderness. I mean, you shouldn't trade in the middle of nowhere on the charts without understanding what the market is, what is going on in the market. So you need to know what price is actually doing. You need to have a clue of what price is actually doing before you take trades, and then learn to trade from key zones. So let's go over to the fourth, which is the last. Take trade at zones. Now you need to learn to trade from zone to zone. You need to learn to buy on support, sell at resistance, and then buy the retest of resistance, and then sell the retest of support when you see your confirmation. Sometimes we do have fake outs. You have fake outs in the market. Now I'm gonna give you an example of this now. Let's go back to the charts. Give an example of this. Let's see. Um okay guys. Now this is a resistance over here. Yeah, we all know. Or let me just assume that okay, this is a resistance here, this is a resistance here. Now at this point, guys, at this point, price broke through our resistance. You can see it, price broke our resistance. So a retest happened. What do you do at this point? You look for buying opportunities on the retest of previous resistance. So price broke, retested, and then boom, we up in profit. So this is how you buy retest of resistance. At this point now, you can look for candlestick confirmations. You see we had some weak rejections here. If actually you can see it, let me clear the joints here. Okay, you can see we had some weak rejections here. If you go down to the smaller time frame, you're going to see some candlestick entry patterns here. So that is how actually you learn to trade break and retest, because sometimes we do have fake outs. Yeah, sometimes the market might just form a resistance. Sorry for that. The market might form a resistance. Let's see like this, for example. We have a resistance here, and then it does something like this. Now you think it's actually broken, but then it comes back and continue the range. Yeah, the market behaves like this. So you need to know that okay, on the retest, you also seek other confirmations before you take entries. So let's go back to the slide. Yeah, so you need to learn to trade from zone to zone, buy on support, sell at resistance, buy retest of resistance, sell retest of support. And by doing this, guys, by trading from zones to zones, you most likely escape spikes, which are sometimes pullbacks or retracements that could keep you terrified or scared. So I really hope this video was helpful. If you learned from this video, I need you to comment the comment box, and also you can join our Telegram channel. The link is going to be in the description box below. And if actually you like this video, don't forget to hit the subscribe button and turn on the bell, so when next you upload a video you are notified. So have a nice day, guys. It's your trader Wesley speaking, and I'm signing out. Thank you for watching.